New to the cryptocurrency world and puzzled by the jargon? Don't worry, we've got you covered. Welcome to the first step in your crypto journey. You've probably heard words like Bitcoin, blockchain, and altcoin tossed around, and maybe you've wondered what they all mean. Well, it's your lucky day because we're about to demystify these terms and many more. This video is your ultimate guide to understanding the essential terminologies of the crypto universe. It's like a decoder ring for all those complex words and phrases that can seem so intimidating at first. We'll break it all down from the basic concepts to the more advanced ones, ensuring that by the end of this video, you'll have a firm grasp on the language of cryptocurrency. So fasten your seatbelts as we prepare to journey into the heart of the crypto sphere. Let's dive into the world of cryptocurrency and unravel its language. First off, let's talk about the term that started it all: cryptocurrency. Cryptocurrency is a digital or virtual currency that uses cryptography for security. It's not controlled by any central authority, like a government or financial institution, but operates independently on a decentralized network. This means it's immune to government interference or manipulation. The allure of cryptocurrencies lies in their potential to act as a store of value and a medium of exchange, just like traditional currencies, but with the added benefits of security, privacy, and freedom from central control. Now you might wonder, how does a system like this function without a central authority? Well, that's where blockchain comes in. Blockchain is a decentralized, distributed ledger technology that records all transactions made with a particular cryptocurrency. It's essentially a chain of blocks, where each block contains data about a specific transaction. This information is recorded across multiple computers called nodes, in a way that is immutable and transparent. In other words, once a transaction is added to the blockchain, it cannot be altered or deleted. This makes the system incredibly secure and resistant to fraud. The transparent nature of blockchain also means that anyone can view the transaction history of a particular cryptocurrency, which helps maintain accountability and trust in the system. Cryptocurrency and blockchain are inherently interrelated. You can't have a cryptocurrency without a blockchain to record its transactions. And while blockchain technology can and is being used for many other applications beyond cryptocurrencies, its rise to prominence is largely due to the success of the first cryptocurrency, Bitcoin. So, in simple terms, cryptocurrency is a digital currency, and blockchain is the technology that underpins it. They represent a revolutionary new approach to finance and transactions, one that prioritizes decentralization, security, and transparency. As we delve deeper into the world of cryptocurrencies, you'll see just how these foundational concepts play out in various forms and applications. Now let's move on to Bitcoin and altcoin. When we talk about cryptocurrencies, Bitcoin is often the first that comes to mind. Created in 2009 by an unknown entity named Satoshi Nakamoto, Bitcoin was the first digital currency to solve the double spending problem without needing a central authority. This innovation paved the way for a new financial order. But Bitcoin isn't the only player in the game. There's a whole universe of cryptocurrencies out there, collectively known as altcoins. The term altcoin is a blend of two words, alternative and coin. As the name suggests, these are alternatives to Bitcoin. From Ethereum to Ripple and Litecoin to many others, altcoins offer different features, technologies, and uses that distinguish them from Bitcoin. So, while Bitcoin may have blazed the trail, altcoins are carving their own paths in the vast landscape of cryptocurrencies. In essence, Bitcoin is the pioneer, and all other cryptocurrencies are alternatives, hence the name altcoins. Next up, we have wallets, keys, and mining. Imagine your cryptocurrency as digital cash. If you had a bunch of cash, you wouldn't just leave it lying around, right? You'd put it in a safe place like a wallet. In the crypto world, that's exactly what a wallet is. It's software or hardware that securely stores your cryptocurrencies. But instead of storing physical cash, wallets hold the private keys required to access and manage your cryptocurrencies. So what are these keys we're talking about? Well, they're not like the keys to your house or car. In cryptography, a key is a string of characters used for encryption and decryption. In the context of cryptocurrencies, we have two types: private keys and public keys. A private key is like the key to your personal safe. It's a secret series of characters that allows you to access your wallet and authorize transactions. It's crucial to keep this key safe and private because if someone else gets a hold of it, they can access and potentially steal your cryptocurrencies. On the other hand, a public key is like your email address. It's a series of characters derived from your private key that you can share with others. This is the address to which others can send you cryptocurrencies. But how do these transactions get verified? That's where mining comes in. Mining is the process where transactions are validated and added to the blockchain. This is typically done by powerful computers that solve complex mathematical puzzles. When a puzzle is solved, the miner adds the transaction to the blockchain and is rewarded with a small amount of cryptocurrency. This process is fundamental to the functioning of decentralized networks, ensuring the integrity and transparency of transactions. Remember, your private key is like your PIN number. Keep it safe. Let's proceed to hash, fork, and smart contract. Starting with hash. In the context of cryptocurrencies, a hash is a function that takes an input and returns a fixed-size string of characters. The output, or hash value, is unique to each unique input. This means if even one character in the input changes, the resulting hash will be completely different. Hash functions are a crucial part of blockchain technology, providing a way to ensure data integrity. When a new block is created in a blockchain, it includes a hash of all the transaction data it contains, plus the hash of the previous block. This chaining of blocks through hashes is what makes the blockchain immutable, as altering any data in a block would change its hash and break the chain. Next, we have fork. In the simplest terms, a fork is a divergence in the protocol of a blockchain that results in two different versions of the blockchain, each with its own history of transactions. There are two types of forks, hard and soft. A hard fork is a change to the protocol that makes old versions incompatible. This means that all participants need to update to the new version to continue participating in the network. A soft fork, on the other hand, is a change that is backward compatible. Old versions of the software can still participate in the network, even if they don't recognize the new rules. Finally, we've got smart contracts. These are self-executing contracts with the terms of the agreement directly written into code. They're like digital vending machines. You send a cryptocurrency to the smart contract, and your escrow, house deed, or whatever the contract was about, drops into your account. All of this without any middleman. They automatically execute and enforce the terms of the contract when predefined conditions are met. They're the building blocks of decentralized applications and organizations. So, a fork is simply a change in the protocol, and a smart contract is a contract that executes itself. Finally, we'll talk about DeFi, token, ICO, and market cap. These terms are key elements that shape the cryptocurrency ecosystem. Decentralized finance, or DeFi for short, is a revolutionary concept that aims to recreate traditional financial systems using blockchain technology. It eliminates the need for intermediaries, such as banks or brokers. DeFi services and applications operate on decentralized networks, providing a more open, transparent, and inclusive financial system. Next up is token. In the world of cryptocurrencies, a token is a type of digital asset. It represents ownership or value in its simplest form, but tokens are versatile. They can signify a variety of assets, from cryptocurrencies themselves to real estate, securities, or even a specific utility within a particular ecosystem. They're like digital vouchers that hold value, and their use cases are as diverse as the projects that create them. Moving on, we have ICO, which stands for Initial Coin Offering. Think of it as the cryptocurrency version of a company's initial public offering, or IPO. In an ICO, new projects sell their underlying cryptocurrency tokens to early backers in exchange for funding. It's a way for these projects to raise capital while giving investors the chance to get in on the ground floor of potentially promising ventures. Finally, we come to market cap, short for market capitalization. This term is used to provide a rough estimate of the total value of a particular cryptocurrency. It's calculated by multiplying the current price of the cryptocurrency by the total number of coins or tokens in circulation. But it's important to note that while market cap can give you an idea of a cryptocurrency's size, it doesn't necessarily reflect its true value or potential. So, market cap gives you a rough estimate of the total value of a particular cryptocurrency. And with that, we've covered DeFi, token, ICO, and market cap. As you can see, these terms represent different aspects of the vibrant and ever-evolving cryptocurrency ecosystem. They're crucial pieces of the crypto puzzle, helping us to better understand this exciting new world of digital finance. So there you have it, a beginner's guide to the language of cryptocurrencies. From understanding what a cryptocurrency is, to the intricacies of blockchain technology. We've delved into the world of Bitcoin and its many alternatives, known as altcoins, and explored the importance of wallets and the keys that keep them secure. We've journeyed through the mining process, decoded the significance of hashes and forks, and unpacked the functionality of smart contracts. We've also touched on the emerging world of decentralized finance, or DeFi, and discussed the role of tokens, ICOs, and market caps. These are the building blocks, the essential vocabulary you need to navigate this exciting digital landscape. As you venture further into the world of cryptocurrencies, continue to learn, continue to question, and continue to explore. Remember, knowledge is power, especially in the rapidly evolving world of cryptocurrencies. Stay curious and stay informed. Until next time.